Good afternoon. Today is Monday, September the 18th. The time right now in Singapore is 12:13 in the afternoon. Now, today we do a bit of recap as to what happened on Friday. We have quite a bit of big move on Friday, largely on the back of the Michigan Consumer Sentiment Index that has fallen instead a lot deeper than the market expected. And of course, last week we have seen the various CPI and PPI numbers released in the States, and those are pointing to the idea that the inflation is coming back in the States in no subtle way. We can see that consumer prices has actually rebounded off the most recent low. So is the producer price index. So this is setting the stage for this week's FOMC meeting, which is going to be released on the 20th, or rather in Singapore time will be on the 21st early morning at 2 a.m., which the Fed is likely to be keeping rates unchanged. Now, what happened last week was the ECB, the European Central Bank, has actually hiked rates to the highest level since the creation of the single currency to 4%. And this week we have the Bank of England likely to also hike rate to 5.5%, matching what the Fed interest rate is. And this is pointing to the idea that inflation is still raging very hot in Europe, and this is setting the stage for slowdown in economic activity. Now, let's take a look at the equity markets in the States. We can see that the Dow Jones itself, now what you have in front of you is the 4 hours time frame micro E-mini futures. We can see last Friday, we can see prices hit a high of 357 and actually came off. Yeah, this level actually fell short, or was short of my target at 35,426 to 35,687, which represents a equality move of this three-wave rally here. But anyway, the sell-off was quite severe, and this is setting the stage for even further losses going into this week. Now, today we do not have any major high-impact economic data to release, so the market is likely to be based on perhaps a technical rebound. And if we get a rebound, most likely we're going to see a move back to 35,100 levels, and we will see what market do at those levels before the market actually may actually be trading more to the downside than upside. So I do have a little bit of a bearish bias going into this week's trading. Okay, and on the S&P 500, we also saw the severe pullback, but unlike the Dow Jones itself, we already have a three-wave rally. So this extra move here, internally, there is also a three-wave move, and the market actually took out marginally the high that we saw here at 4,560 and three-quarter, and then when the market couldn't hold and fell back to 4,491 and three-quarter. So this is also setting the stage for perhaps at most a 50% rebound, likely to be somewhere in this area here. Let me see, where is that going to be? It's going to be about 4,530 levels. So if we do get a rebound back to this level, this could be a level in which a market may actually unravel again towards the 4,400 to 4,430 levels. This will be the first layer of possible demand. Okay, and then of course we have the micro E-mini Nasdaq 100. Now the fall on Friday was actually more severe in the Nasdaq, largely because we have seen how tech stock has actually overshot the market, and the high traded last week was 15,719 and three-quarter, and this is in the upper range of this three-wave rally here, and the market fall off to 15,356 and three-quarter before currently it's just trading at 15,412 thereabout. Most likely, again, at most we're going to get a 50% retracement back to about perhaps, let me get it correctly, to about 15,500. Okay, 15,500 is also at the bottom of this 100% retracement corrective rally levels here, and I think that's probably the most you can do before the market unravels to test the 15,000 levels. So basically, I do see prices do falling back. And over in Asia, we can see Hong Kong this morning has fell off at the get-go. Last week high was 18,417, and this was within the bracket of prices which I actually think that the sellers may actually re-emerge again at 18,318 to 18,572 because internally there was a three-wave rally here and prices is coming back down. I do believe that the low here that we saw, let me see, let me move myself away from this chart here. Now, the low here was at 17,539. So there's a very good chance market may actually take out this low here and resume its downtrend from all the way from 20,400. Okay, over the Nikkei, we are seeing a similar pattern, although it is still holding the line pretty well. Currently, market is about at 33,000 levels, and I have reason to believe that the market have already topped up at 33,450 and it's probably getting ready to trade to the downside. First layer of possible demand may be residing at 32,100 to 32,300 levels. So do look out for support around here. But eventually, I do think that over the medium to long term, prices is definitely going to trade to the downside, more likely to be the upside. Okay. Over the dollar, we can see dollar remains very, very firm. And in the dollar index, we can see dollar index has recently traded to a high of 105.13. And last Friday, we have another attempt to go higher, but did not quite manage. But it did recover from the low of 104.20 levels. And by and large, I think the market is still very well supported. If the market continue to trade higher, I think it's going to challenge the March high at 105.87s and perhaps even higher. Okay. And if that's the case, the rebound that we see in the principal currency may be short-lived. Right now, we can see that the euro versus the dollar has hit a bottom just under the 105.50 levels. In fact, the low traded on Friday 105.32, and this is laying the foundation for. Technically, I would think there's a possible of a rebound, but you can see overhead. There are many layers of resistance that it would have to overcome. The first layer being 107.70 to 108.10, so that would be acting as the first layer of resistance in the event of any rebound going forward. But I think the rebound is actually possible. Let's see what happens, because the market actually took out the marginal low here of the May low at 106.50 with a low at 106.38 and before it rebound. So this rebound could be a fake move here. Let's see. But so far, there is no definitive evidence to show that the buyers are in yet. Okay. Then in the sterling, you can see sterling has also gone down to 123.80, and it does look like there's still further downside left in the sterling. Do remember on Thursday, the Bank of England is likely to hike interest rates, and if they also signal that this is going to be the last of the rate hikes, then instead of going higher, it may actually comes down. So let's see what happens on Thursday, and the level to watch out for will be 122.75 to 123.45 levels. Over in the Aussie has managed to recover in a three-wave rally to 0.6470, and this is the area which I think it will be pivotal to see what it does. Most likely, it will come back down first before it goes up, and if that's the case, it could be doing a larger degree three-wave targeting 0.65. Okay. Dollar yen is still very stubbornly trading above the 147.5 level. High traded on Friday over 147.95, not far away from an area of possible resistance at 148.25 to 149.70. So do look out for levels here that maybe something big will happen here. I suggest do not buy at this current level because it's getting a little bit hairy even for my liking. Now, the one that I think they may actually offer some kind of trading opportunity is the dollar Canadian. Most recent low here is 134.80, 90 levels. You can see the market has been holding pretty well. So Friday, the market actually tried to test this level, did not quite make it, and market is in holding pattern right now. I think somewhere around 134.90 to 135.20, it could be a buying opportunity, at least for a short-term rebound back to the 136 levels. So do look out for a bounce back to this level, and from there we will see what happens. Okay, and in the crude oil is at a 10-month high at $91.23. Now, this is already within this bracket of prices, which is or rather going to be in this bracket of prices, which I think is going to be vulnerable. $92 to $93.75 is where I think the market will be very vulnerable, because the October high is just nearby at $94.64. So I think even if the market try, I do not believe that it will break this level on the first go. Perhaps there will be a forced move here to watch out for a reversal, something around the 95 levels. And then in the gold market, we can see gold prices has basically rebounded off the low at 1900. Currently, it's challenging the 1930 levels, and there's a very good chance it will it will break above this 1931 to go into 1936 to 1940 levels before we see any kind of resistance. So do watch out. If you have not already bought, this is a lousy price to buy. In fact, if we can get a pullback to around the $1,915, that will be a much better and more comfortable level to actually go long. Okay, silver is even stronger than gold right now. We can see that the market has gone up to $23.29, very close to the $23.50 to $23.60 barrier, which I think I marked out here. I do expect some kind of resistance to emerge from around these levels. So in the meantime, if we can get a pullback to somewhere around the $22.80, that will be a much better level to go long. Okay, and over in Bitcoin, we can see Bitcoin has been very stable. Most recent high on Saturday is just under $27,000. And if we can get a pullback to 26,000, that will be a much better level to go long, putting your stop just underneath the June low at $24,800. So this is my outlook for the various markets. In the meantime, you take care, and I'll come back to you tomorrow with another update. Bye-bye.